Cheers to a tepid Tuesday retail trading team. This is your routine debrief. We're going to start today's cool down by reviewing the day's results, as per usual. So it was a good day. We made $4,300 total. It was really low stress. It was one of those pivot fade scenarios, so we only had to take one side. We never did get that time and volume above 38.75, which would have prompted the other side, so it was nice and easy. We had that good futures trade overnight, and if it hadn't been for a small error on my part, so I did take off the entire trade at the open, and I really should have held that trade. That was my initial plan, but I just kind of wanted to lock in profits. If I hadn't done that, it would have been an extra $1,500, and more importantly, it would have been an A performance. So I'm always looking at my trading any given day as an A, B, or C. There's not too many A's. There's a lot of B's, and fortunately, there's not too many C's. So it was a really close to an A today, but we didn't quite get there. So yeah, so I have no complaints. Obviously, going tomorrow, I'm just trying out a 38.60 fly. I don't think we're really going to move too much, so I think um, I dare say free money uh, with a plan of closing before the announcement. And obviously, we'll see. So no hero stuff tomorrow. I want to emphasize that it's often smart not to trade at all on FOMC days. And if you do, you keep your size small and you only take the best opportunities because there's plenty of action. So a little bit goes a long way on these days, particularly. So let's look at the playing field and try to figure out what we can likely expect out of the day tomorrow. So just a quick public service announcement. I mentioned it in the newsletter. I just want to mention it again. As you all know, well, if you're a new watcher, you don't know, but those of you who traded with me in the past know that I'm a big fan of Tastyworks. And for zero DTE, though, the one problem that we had with them is they didn't have the stops on spreads. As of today, we have those stops on spreads, so that's really exciting. And yeah, if you're a Tastyworks user, that is going to obviously be relevant to you. If you were holding back on Tastyworks, well, now you have that stops on spreads. So um, I guess if I'm going to give you a quick plug, if you are not yet a user, if you go to my routine trading folder, it's in the bio here, and you click my affiliate link, that'd be really swell. I don't really know if there's any benefit to it, but I assume there's some type of benefit. So yeah, if you're not a Tasteworks user yet, and you want to be, yeah, that's the affiliate link there. That's the only plug that I have for you today. Let's talk about the important stuff. So, okay, what's our zero DT landscape for tomorrow in terms of price, volume, and volatility? So, looking at the macro chart here, what's going on? I think the really key element of today, I'm going to use our handy dandy ellipse tool. Check out this flaggy looking tape and look at price relative to that downward sloping red trend line. I think that's going to be really important tomorrow. Obviously, FOMC is notorious for traps, so kind of look to potentially fade that first move, whatever side it goes on. But how we build time and volume relative to that trend line after the announcement, I think is going to indicate which way we're going. To the upside, obviously, there's still a lot of supply. So I don't really have an upside target for you. Just kind of watch as we get above that 100 SMA near today's high. If we start to build time volume above there, obviously we'll continue moving upwards. But if we start to move down, I think we have more clear targets. So to spare you from more uhs and ahs, let's go look at our standard chessboard today. So on a shorter time frame, I did clean up this TPO a little bit. There are a couple merged profiles that I don't think qualified, so I cleaned it up for us. And yeah, you can see very clearly we have the island value area that rejected yet again today. So for me, that first sign of trouble for bulls is time and volume above that 39.28 area. So any first move, again, FOMC is super trappy, always looking for that false break. Any first move will first look to fade. But if we start to build time and volume, it's likely, gotta go back to hand tool, it's likely that we go up and we start by testing this POC here. Above that, there's plenty of other areas to test into the 4,000 handle. But first, we have to build that time and volume above that high from today. So on the downside, I think the targets are, I'm actually going to just go like this. I think the targets are a little easier. So the first is going to be, remember, if you looked at my Sunday Fun Day piece from this week, you'll see the import of that 3850 to really 3815 zone. So there's some space there now. And if we start to go into there, again, looking to fade that first move until time and volume builds. That's unfavorable to either the bull case or the bear case. But if we do move below that range, so again, that range ends at about 38.15. If we do move below that, watch how we react to this whole green zone and very specifically that 37.99 25 naked POC. If we get through that, I think really the next stop is going to be around that 37.50 area. I'm not necessarily expecting that for tomorrow, but if we do get down there, we have a nice chunky demand zone. I think really the most important area of which is that 3,700 naked POC again, if we do get into this zone. So besides that, just kind of, I think a leading indicator is going to be, as usual, this volatility. So this is our current channel, if you will. It's a little messy. This is kind of, it's not really the midpoint, but this seems to be the area that volatility price has been consolidating around. So I'll be watching how we react to this trend line really closely. And then if we break below this, again, always looking for that false break, but its continuation will probably lead to an extended move up. And likewise on the other side, if we start to build time volume above this, we're likely to see an extended sell-off. So that's our VIX range. And that's really it for today. I think I'm just going to flash that macro chart again. I think that macro trend line we're looking at there, we were in that kind of bull flag look on the daily, no doubt about it. We do have a potential double top, so it really depends who you're asking. But for me, I'm really watching that trend line. I want to see how we react once the announcement once we start really the press conference, so about 2:30 Eastern. I want to see where we're moving relative to that. It's probably going to swing around a lot. If you just look at the targets that discussed earlier in the video, I think those present good first fades. But as the day develops and definitely into Thursday and Friday, how we react to this trend line is probably going to lead to the next trend move. And that's all I have besides that. I'll be here in the trenches with you. I'm going to get in at 1400 Eastern. I'm going to obviously close that fly that we talked about earlier. And I'm just going to let the tape kind of tell me what to do. Look to fade the first moves as usual in FOMC. But as time goes on here, I want to watch that trend line very closely. So please look at the bio here for any engagement links, playbook, any important resources. I'm always happy to answer any questions that you send me via the video comments here or directly to the newsletter. And yeah, get excited. I mean, FOMC, it's a little rough. I don't really like selling out of the money premium. It's a little risky, but just those short-term scalps and futures trades are usually super profitable. And it's always a fun day. It's always fun tape to watch. Well, I shouldn't say always. It's usually fun tape to watch, and regardless, it really gives us a good indication of what to expect for the next several trading sessions going forward. So we'll have more tomorrow. We'll have a routine debrief then to review everything. And until then, stay classy.